Are you feeling anxious about your something? Don't worry, I'm going to explain to you everything you need to know about tax audit from tax or audit to how you can prepare and stay compliant. Let's get started. So, what is tax audit? Tax audit is an examination of taxpayer business record and furniture of fair to ascertain that the right amount of income should be declared and the right amount of tax should be calculated and paid are in accordance with tax law and regulations. The main objective of tax audit is to encourage voluntary compliance with the tax law and regulation and to ensure that a higher tax compliance rate is achieved under the self-assessment system, which is known as SAS. In this regard, the audit officer is required to ensure that the current amount of income has been input and the right amount of tax has been paid in accordance with the tax law and regulation. The tax audit activity is then approved by the Inland Revenue Board of Malaysia to educate as well as to create awareness of provide exposure to the taxpayer on its right and responsibility under the provision of the Income Tax Act.
Ami, since we have already taken the tax course until semester 3, do you know anything about tax audit?
I know there are several types of tax audits, such as desk audits and field audits. Which one do you think is the most common? Let me explain to you. First, desk audit. Do you know a desk audit held at the IRBM office? It involves a detailed examination of specific items or issues within a taxpayer's tax return, typically based on inconsistencies, red flags, or discrepancies identified during initial reviews. It also focuses on specific areas like income, deductions, credit, or expenses made by the taxpayer.
Yes, I have heard about it, but I'm also curious about field audits. Can you explain more about it?
I can, unless you buy me ice cream. Just kidding. Let me explain field audits to you. A field audit takes place at the taxpayer premise and it consists of general compliance audit, issue-based audit, and special audit.
Can a tax audit cover multiple tax period, or does it usually focus on specific tax issues?
Of course, field audit can cover multiple tax periods or focus on specific tax issues. It also involves a detailed examination of records such as financial statements and bank accounts, payroll records, invoices and receipts, contract business transactions, and asset ownership records.
Now I understand. Thank you, Ami, for your great explanation.
Yeah, thank you too. I think you can be like Madam Laila.
Laila, I have a question. Do you know how tax is carried out?
Tax is carried out with 6 main process. Let me show you how it's carried out. Let's go. First, audit venue. A tax audit is carried out at the IRBM office, where a file of audit is carried out at the taxpayer business premise. Where the business premise are not suitable, the taxpayer may suggest a suitable alternative for IRBM agreement. Number 2, audit commencement. A request for document and information letter will be issued to the taxpayer by official email or fax or mail to acquire documents and information. The taxpayer is required to provide feedback within 14 calendar days from the date of request for document and information letter. If the taxpayer fails to provide feedback within the time specified, the audit action will be resumed using the appropriate method. In the case of a desk audit, the letter will not be issued in certain cases, but the taxpayer will be notified of any income and tax adjustment that will be issued with the notice of assessment. While for a file audit, the letter will be issued to the taxpayer at least 14 calendar days prior to the date of visit. If a compliance visit notification letter has been issued, the taxpayer may apply to postpone the date of the audit visit on reasonable grounds and avoidable circumstances. You are getting audited. Here are some things you need to know. Number 3, the visit. An audit visit is only applicable to the file audit. Normally, it starts with an interview. The purpose of an interview is to enable the audit officer to meet the taxpayer, obtain an overview of the taxpayer business activity, and to discuss the audit. The taxpayer will be asked to explain his business activities, the country record keeping system. During the audit process, the person responsible for the handling of the taxpayer business record will also be interviewed. Number 4, examination of records. During the course of an audit, the audit officer should be allowed to examine all business records and to inspect stock and equipment physically for verification of the claim needs. Records pertaining to the year of assessment, which are already time-barred, will not be examined. In certain circumstances, there may be a need to examine records other than business records, where it involves the audit of sole proprietorship and partnership. Examination of records will only be carried out at the taxpayer business premises. If it's deemed necessary, the audit officer should be allowed to make copies of relevant documents. However, under circumstances where the workplace provided by the taxpayer is not suitable or conducive to carry out the audit, or where copy of facility is not available, the audit officer, with the consent of the taxpayer, may obtain records for the examination at the IRBM office. In such a case, the document will be returned to the taxpayer once the examination is done.
Number 5. Audit time frame.
The time required is to complete the on-site examination of records is 1 to 3 days. This is only applicable to the file audit. However, it can be extended with the following factors.
Number 6. Settlements of audit.
After concluding the audit work, the audit officer will prepare an audit findings report for the approval by the branch audit manager. Under certain circumstances, the taxpayer is required to be present at the IRBM office for discussion on the proposed tax adjustment. The audit officer and senior audit will discuss with the taxpayer. The taxpayer, without being called by the RIBM, may be present at RIBM office to seek clarification regarding the progress of the audit process or to give further information to expedite the settlement of the audit. The time frame for settlement of a tax audit should be 19 calendar days from the commencement of the audit. IRBM will inform the taxpayer on the progress of the audit in the event that the case needs more than 19 days to settle. Once the audit case is settled, the audit should not be repeated on the same issue for the year of assessment. However, if there are new issues to be pursued or new information is received, an audit can be repeated for the same year of assessment.
Maybe, do you know what is the selection criteria of tax audit? No. Farah is there. Let's ask her. Farah, do you know how many selection criteria for tax audit?
There are 6 selection criteria that need to be considered when deciding which taxpayer to audit, such as location, risk analysis, third-party information, and many more.
Wow, there are so many criteria that need to be considered. Can you talk more about it? I'm interested to know.
Wait a minute, I will explain to you further for you to know it. Firstly, for the location, the companies need to be located in major cities such as KL, Penang, JB, and Malacca. Why? Because companies located in such cities are higher to be selected for tax audit other than the other cities. This is because the number of listed companies and economic activities are well established there.
But what if the company is located in different cities such as Perak?
If the company is located in different cities, the percentage for them to be selected for tax audit is lower than the major cities. But we do not know, they also can try. Next criteria for the tax audit are specific industry, where specialist industries such as property developer, telecommunication, and taxi operators are also selected for tax audit, as these industries have dynamic development, are vulnerable, and have many unresolved and contentious issues. IRB will embark on a tax audit on another taxpayer if there is a regulatory suspicion such as taxpayer may have underreported business income, to participation on the expense account to another taxpayer. Taxpayer previously return of return, taxpayer who has the habit of late submission of return or non-submission of return will have a higher risk of being selected for tax audit. Then, the company needs to be involved in contentious tax development, which are the hotly debated contentious tax issues that prioritize for tax audit, as judgmental deliberation are involved. IRB will compile statistics on industry average on turnover and gross profit of all industry with the help of information technologies. Risk analysis will then be carried out to select companies that have wide discrepancy with this average.
Now I understand it much better than before. How about you, Nelly? Do you understand what Farah has been explained?
Yes, of course. I understand it better too. Thank you, Farah.
Guys, I been selected for tax audit, but I'm really not sure what that means. What exactly do I need to know more about this process?
I think as someone conducting the audit, make sure everything is correct. The rights and responsibility of everyone involved in the process. And as a tax agent, I am here to help guide the taxpayer through it. So what should I be doing to ensure that everything goes smoothly and correctly?
Next question. So today we are breaking down the 3 main laws in tax audit. Let's get started. Let's start with the role of the audit officer. An audit officer must adhere to the rules and code of ethics set forth by the Inland Revenue Board of Malaysia or IRBM when carrying out their duties. The audit officer must always be professional, well-mannered, trustworthy, honest, and act with integrity. They should also be ready to explain the objective of the tax audit and the right and responsibilities of the taxpayer. Additionally, the audit officer must be knowledgeable and fair when administering tax laws. However, there are certain things an audit officer cannot do. They must not have any personal or financial interest in the business of the taxpayer being audited. They are also prohibited from recommending a specific tax agent to the taxpayer or abusing their power in performing their duties as outlined under Section 11A of the Income Tax Act. Moving on to the taxpayer's role. The taxpayer has their own set of responsibilities. They must cooperate fully with the audit officer, showing courtesy, fairness, honesty, and integrity throughout the process. Taxpayers should also provide reasonable facilities and assistance to the audit officer, enabling them to carry out their duties effectively. Importantly, taxpayer must fully cooperate by providing complete and truthful response to any queries the audit officer may have. At the same time, there are actions that taxpayers must avoid. They cannot give any form of gift to the audit officer or conduct any business with the audit officer during the audit process. They must not make any payments to the audit officer, and they must never obstruct the audit officer from carrying out their duties. Finally, let's look at the role of the tax agent. When performing their duties, an approved tax agent must act with integrity, professionalism, and a strong knowledge of tax laws and practice. Tax agent must be honest, trustworthy, and transparent, always cooperating fully with both the taxpayer and IRBM. They should also notify IRBM if they are no longer providing service to the taxpayer and must adhere to the procedure and guidelines set by the IRBM. Tax agent must refrain from misusing any information they acquire or abusing their position for personal gain. Tax agents are also prohibited from certain actions. They must never give wrong advice or works with the taxpayers to reduce the amount of tax due. They cannot delay the audit process or abandon their responsibilities. And finally, tax agents are prohibited from offering any form of gift to the audit officer, even on behalf of the taxpayer.
Hello, let's start our podcast with Miss Farisha and Audit IRBI with topic is assessment and penalties. So, Miss Farisha, I have some simple question. What happens if someone doesn't declare all their income or forget to report certain earnings?
It's called understatement of tax. Imagine you're running a small business, but during an audit, it discovered that part of your income has been understatement of origin. What happened then? So, according to the law, specifically subsection 113(2) or paragraph 44B, subsection 6B of ITA, a penalty will be imposed. So, let me break this down for you. Normally, the penalty is 100% equal to the tax that was underpaid. But here's the good news. If your first offense, the DGIR, Director General of Inland Revenue, can be kind enough to reduce the penalty to 45%. Okay, for example, let's say you forgot to report 10,000 ringgit worth of tax. The penalty could be another 10,000 ringgit on top of it. But if your first time, it might be reduced to 4,500 ringgit instead.
So, the best way to avoid this is to report all income accurately, am I right?
Yes, exactly. Be honest, double check your report, and you will have nothing to worry about.
Alright, let's move to the next part, which is provision of reasonable facility and assistance during a tax audit. Now, let's say the Inland Revenue Board Malaysia officer show up at your business for an audit. What do you think they need? Probably document and a place to work?
Exactly. There is a reasonable facility, things like space, access to record, and your cooperation. This is legal requirement under Section 18 and 81A. If you refuse or make things difficult for the officers, it's an offence. And the consequence, well, there are three possibilities. A fine between 1,000 ringgit to 10,000 ringgit, imprisonment for up to 1 year, or both a fine and imprisonment. For example, imagine the audit team arrived and you said, sorry, I don't have time to come back, and come back later. That could land you a 10,000 fine or even jail time.
That sounds so serious. So we should just cooperate?
Yeah, we have to be polite, provide what they need, and the process will go smoothly, as simple as that.
Now, let's talk about something all business owners should know, which is keeping records. Basically, under section 82(1)(a), if you're running a business, you must keep and service for all your record for 7 years.
Wait, 7 years? That's a long time.
Yes, it must be. Yes, it is, but it's necessary. This record include receipt, sales data, invoice, and other financial document. Here's what happened if you don't keep your record properly. You could be fined between 300 and 10,000 ringgit. You could be fined between 300 ringgit to 10,000 ringgit. You could go to jail for up to 1 year, or you could be faced both fine and imprisonment. Example, let's say you're running a small cafe and one day IRM audits you. They ask for last year's sales record, but you lost time. That's big problem, and you could be fined or jailed.
So we need to organize and keep everything, even if it feel unnecessary.
Yeah, exactly. Think of it as protecting yourself. Keeping records doesn't just help you avoid penalties. It also makes your business more organized and prepared for any audit.